main asset posting, sub asset posting, everything we have completed. Now we want to see some reports. There are two reports, important reports. One report is we want to see each sub asset wise, year wise values. The path is like this: accounting, financial. Asset. Asset. Explorer. Explorer. Give the company code RIL, asset number 2,01,000, sub number 0, mission number 1. RIL 2,01,000, sub number 0, mission number 1. Enter. Each sub asset wise for the whole year is showing the depreciation. See here, purchase cost 10 lakh, depreciation 47,500, net book value 9,52,500. Why 47,500 is coming? If you see that exemption description earlier, whatever you discussed, see here. Yeah, if you see here earlier, asset purchase as per Companies Act, asset purchase cost is 10 lakh, scrap value or residual value 5%, 9,50,000, 9,50,000 useful life you are given 20 years, depreciation per annum is 47,500. Whatever key you have created, it's calculating correctly. This is as per Companies Act. Now change the asset to 2 lakh to sub number 0, mission number 2.
Sir, can we see month-wise depreciation?
Yeah, when you run it post month-wise only, that is the available. One report I'll show you. This is one report. Sir. One more report is available.
Okay, sir.
Okay. 2 lakh to sub number 0. Question number 2. Question number 2. Press enter. Now it shows the depreciation is 18,849. How it's calculating 18,849? To deselect display to check depreciation calculations, select display depreciation calculation button. Display depreciation calculation button. Select period information button. Period information button. Because you purchased the asset from 22 onwards, 22 April, so it's not calculating for first 21 days. First 21 days, it's not calculating. Now, what the value is coming? We'll check that one. If you see here, for 4 lakh the purchase cost, for 344 days, 344 days. Whole year 365 days, 5% straight line method, 18,849. It's coming 18,849 because we are given the rounding rule. It is rounded off and is showing 18,849. We'll say subasset also, values also. This is the straight line method key. Select back arrow. Select back arrow. Change the asset to 2 lakh to sub number 1 motor. Motor. Enter. When you give motor is showing 75,000, it's calculating 2908 amount. Now see here why 2908 is coming. See here motor cost you have given 75,000. The rate of depreciation 2908. Let me check 2908 why it's calculating. Achha. Now what is the purchase date you have given? If you see here 22/6. 22/6. If you see 22/6, if you see the calculation 22/6, because we have posted on 22/6. 22/6. For 283 days, it's calculating for 283 days. That is 22/6, 22/6 onwards for 283 days. 283 days. Let me show you here because here I have given the different date. Let me show you here 25,000, 26 to 31st March, not 129 days. This is 283 days. 283 days. 5% rate of depreciation. See here, it's calculating like this sub-asset. This into 283 divided by 365 into 5%. 2907.53. We have given the rounding rule, arithmetic rounding, it takes 2908. 50 paisa above, next rupee 2908. 2908. 2908. 2908. So what are keys you created? Straight line method key, written down value key, useful life key, all the keys they are calculating correctly. In case of written down value key, next year it has to calculate like this. Second year it has to calculate like this. 75,000 minus 2908 into 5%. Second year it has to calculate in the net book value. If you see here 29092 72092 into 57 3604.63605. Secondary difference should be 3605. We'll check that one. Select back arrow. Select back arrow. Select period information button. Comparison. This is already done. That is over. Select comparisons tab. You can see here each year what will be the depreciation. 2020 first year will be 2908. Second year will be 3605. Second year will be 3605. Third year will be 65063. It's calculating a net book value. So you created three keys: straight line method, written down value method, and useful life. All the three keys they're calculating correctly. These are year-wise values. Now we have one more report. We want to see month-wise for a particular month, for a particular period. Report to view all assets for a particular period. I want to see for a particular period, month-wise or 2 months or 3 months or 4 months for a particular period. Accounting, financial accounting, fixed assets. Accounting, financial accounting, fixed assets. Information system, reports on asset accounting. Information system, reports on asset accounting. Balances, asset list. Asset balances, assets list. Asset balances by business area, by business area. The business area. Even the business area we have used, we want to see profit center wise or segment wise. Now there is no business area. Here itself I can see profit center wise. Select all selections button. all selections button. Now here are so many options available. You can see company code wise. You can see number of company codes. You can see number of assets. We can see number of sub assets. Your choice. You can see asset as a whole. Addition, main asset plus additions. Your choice. Company code RIL. I'm giving the report date, any month and date, any date. I'm giving 31/12/2020, any date. 31/12/2020. But you would give month and date only, not in the middle of the month. Depreciation area 01. By default, it comes book depreciation. SAT variant 0016. Company code of the profit center. We want to see profit center wise because there is no business area. We want to see the SAT variant 0016. Company code of the profit center. Select list assets radio button. Select execute button. Now you can see here on 31st December 2020, any month, we have 3 assets are there. You can see these are the 3 assets. Machine number 1, machine number 2, motor. This is capitalized on 1/4. This is capitalized on 22/4. This is capitalized on 22/6. Machine number, sub number, purchase cost, accumulated depreciation up to 31/12, up to 31/12, net book value on 31/12. It's only what will be the depreciation. Depreciation is not yet posted. And it shows profit center wise, profit center state. Double click on machine number 1. It goes to the Explorer, whatever you're seeing in the last step. It goes to the Asset Explorer, whatever you're seeing in the last report. The asset for the year as a whole, it shows the values. Select back arrow 2 times, 1 time, 2 times. Change the report date to 30/4/2020. Report date 30/4/2020. Month end I'm giving. Select execute button. You can see here on 30/4/2020, we have 2 assets, machine number 1, machine number 2. It was capped because motor was purchased in the month of June. Machine number 1, purchase cost, accumulated depreciation, net book value. Machine number 2, purchase cost, accumulated depreciation, net book value. So for the month on 30/4/2020, if you run the depreciation, you should post 4397, the depreciation amount for the month. Because you want to post run depreciation monthly, you can post monthly. 30/4/2020, the depreciation amount is 4397. Now the next topic is depreciation run. When you run depreciation for the
Sir,
tell me.
sir, what is the exact meaning of accumulated depreciation?
Yeah, it's like this. Now when you purchase, when you run the depreciation, what the entry it passes? Depreciation account debit. This is an expenditure. Paid to accumulated depreciation. This is actually liability. This will be deducted from fixed assets. Liability. Suppose first year is 10,000. Second year, we run the same way. Second year also. Now this expenditure, the balance cannot be carried forward. Second year will be suppose same 10,000. Now if you see the P&L account, liabilities balance sheet, it shows accumulated depreciation how much? Last year 10,000, current year 10,000. It accumulates every year. So it will be reduced from the fixed assets list fixed assets, suppose their value is 5 lakh. Less accumulated depreciation. Every year it is accumulated depreciation. First year 10,000, next year 10,000, 20,000. Be reduced. Total will be 4 lakh 80. Whereas P&L account will not be carried forward to next year. We have discussed earlier, this expenditure, it will not be carried forward. Only liability will be carried forward every year. First year 10,000, next year 10,000, total 20,000. This is accumulated depreciation. Some small companies, what they do, instead of showing like this, they reduce from here. Instead of accumulated depreciation, they show fixed assets. They show fixed assets account. Fixed assets account. Reduce from the fixed assets. But net result is same. If I show separately, 4 lakh 80, sorry, 4 lakh 80. See here, what I'm doing, I'm showing this one separately, purchase cost, depreciation separately, net book value. When I say, if you grade to asset, it shows here itself 4 lakh 80,000. You do not know what is the purchase cost, what is the accumulated depreciation. So the entry for depreciation will be depreciation account debit, grade to accumulated depreciation account. And in the balance sheet, from asset side, we reduce the amount. On the asset side, we reduce the amount. So in the company side, as per company side, what we do, we show separately, depreciation separately, this expenditure, accumulated depreciation separately. This will be reduced from the fixed assets. This way we show in the balance sheet. It's accumulating. Every year you're accumulating. Whereas this depreciation expenditure will be every month the same amount, or every month will be there. We will not carry forward to next year. We have discussed earlier in P&L account, balance will not be carried forward to next year.
Okay, sir. Thank you, sir.
Thank you. Now, the next step item is depreciation run. When you run the depreciation, it has to post the depreciation for all the assets for the month. Now I am running for 1 month. Accounting, financial accounting, fixed assets. Periodic processing, depreciation run. Periodic processing, depreciation run. Execute. The transaction code is AFAB. Execute AFAB. Code RIL, fiscal year 2020. Posting period 1 means April. Select planned posting run radio button. And posting run radio button. Select test run checkbox. Test run checkbox. Select execute button. Ignore the message and select yes button. Now see here, it shows the plan amount for the whole year is this much. For the month of April will be 4397. What are you discussed? 4397 will be the depreciation for the month. Amount to be posted. Our system shows, because we are testing in the test run mode, so that any errors are there, it shows the errors. So it shows in green mark, there are no errors. If the errors are there, in red mark it comes. Suppose it's showing in red mark, we want to see the errors. To view the errors, select error list button or F7. Error list button or F7. System shows there are no errors. Suppose it comes in red mark, any error is there, it shows the error there. Select back arrow. So we have seen in test run mode, select back arrow. Deselect test and checkbox. This is because we have seen only test and mode. To post, you deselect test and checkbox. In live environment, we cannot run depreciation foreground. You execute only in the background. System will not permit in the foreground processing. Why it will not permit? See here, to run depreciation only in the background. Only in the background. Why? The reason is like this. In companies, there will be so many locations, so many divisions, so many assets, so many sub-assets, number of rates, number of dates. Suppose if the asset is purchased today, from today to month end, date will be different. It's a old asset for the whole month. If you execute during daytime, the system performance will be slow. It will be slow. System performance will be slow. Here we have no problem, but in live, so many assets will be there, so many locations and different dates, it will be performance will be slow. SAP is given the facility to schedule at nights. What we do? We schedule at night 10 o'clock or 11 o'clock. 10 o'clock or 11 o'clock, nobody will be there. Even you need not be there. You can close your system. But you schedule at 10 o'clock. What system will do? At 10 o'clock, it does the processing in the server. Because it will not be in your desktop. It will be there in the server. At 10 o'clock, it runs the depreciation and posts the entry. So that's why SAP is given background processing, not foreground processing. At night, 10 o'clock, nobody will be there. No issue at all. It runs automatically fast. So how to schedule? I'll tell you. From the menu bar, select program, execute in background. Program, execute in background. Output device LP01, enter. Output device LP01, enter. Now it's asking the scheduling date and time. To schedule in nights, select date of the time button. I want to schedule at night. Date of the time button. Give the schedule start date. This date. Time. Select drop down button. Night I'm giving 22 hours, 00 minutes, 00 seconds. 22 hours, 00 minutes, 00 seconds. Enter, save. Enter. Here you can see here, there is a save button, save button. But if I select save button, it runs at 10 o'clock only in the night. So I'm not saving. Post immediately. I want to run immediately now itself. Remove the parameters. I'm removing the parameters. I have not saved. I'm removing the parameters. Select immediate button. Select save button. Select save button. We get a message. What are the message we get? You can see here. The message is like this. Background job was scheduled for program RAPUST 2000. Background job was scheduled for program RAPUST 2000. In live, what we do? We schedule at 10 o'clock, night 10 o'clock. Next day morning, we'll see whether the job is completed or not. How to see whether the job is completed in the next day morning? I'll tell you. From the menu bar, select System, Services, Jobs. system, services, jobs. Job overview. Select execute button. See here, we can see the job, the status finished. Job RAPUST 2000 finished. We can see job finished. Job status finished. We'll say job status. That means document is posted. Now we'll see the document. What are you posted? To view the document posted FB03. Select document list button. Company code RIL. Document type AF. Depreciation document type you also discussed earlier. AF. AF. Select execute button. Now it shows on 30th 4 one document is posted. Document number is 10 lakh 1. Double click on document number. It shows depreciation account debit credit to accumulated depreciation plant and machinery. All the assets, all the items, plant and machinery items put together, it posts the one entry. Now you want to see asset wise, you can see. Now in S4HANA, it posts each month wise, each sub asset wise. But now in EC6, it posts all the plant and machinery one document, all the buildings one document, based on the account determination, accounts assignment to account determination. All furniture fixtures one item. Now 4397, whatever you've seen, it has posted 4397. Now you want to see here, it's posting to profit center segment. It's deriving because you're given the derivation rule. Because the derivation rule for asset postings, it's taking profit center as well as segment. Now it is posted for all the machineries put together one entry. Now you want to see asset wise. What is posted asset wise, month wise. To view depreciation posted asset wise, month wise report. Accounting, financial accounting, fixed assets. Fixed assets. Information system, reports on asset accounting. Cost accounting, depreciation posted. Cost accounting, depreciation posted. Posted depreciation by asset and posting period. Posted depreciation by asset and posting period. Put RIL, select execute button. See here, it shows asset number 2 lakh 1, sub number 0, 2 lakh 2, sub number 0. It has posted the first period April 3904, 493, total is 4397. Like this, you can see each sub asset wise, each item which machine month wise, you can see the posted depreciation. This you have posted. Somebody was asking month wise, you can see month wise, see period 1, this is a depreciation posted.
Hello.
Yeah, tell me, madam.
Sir, what is the difference between foreground and background, sir?
Yeah, actually foreground depreciation cannot be posted foreground. Foreground means when I execute, it has to post. See here, let me show you here. Let me show you depreciation, whatever you run. Suppose depreciation. I'm giving second month, May month, okay, suppose say. Okay. Now deselect test done. I'll deselect test done. Now I'll say execute means foreground it posts. Foreground it has to post. Execute means it has to post. See here, this can be done only in the background. What is the use of background? We can schedule at night 10 o'clock or 11 o'clock. At that time, nobody will be there. It will do in the processing in the server and post the entry. Why it has to do in the background? The reason is in companies, there will be number of assets, number of sub-assets, number of rates, number of dates. Suppose it's an old asset, 1 month you have to calculate. It's a new asset today you purchased from today to month end. So system performance will be affected. That's why depreciation run should be only in the background processing, not in the foreground processing. Foreground means what? If you run in the beginning directly, execute, that is your foreground processing. Background means what? Program, execute in the background. Then it will ask when enter date and time, date and time. Anytime, any date you can run it, and even if you close your system, it will be processed in the server and post the entry. That is the difference between background processing and foreground processing.
So here, what is that after job and after event?
Uh, no. This actually here first we use only these two. That is date and time are immediate. Date and time means what? That at what date and at what time, on which date at what time. See here at on which date at what time. So if you see here after job, so here suppose before that one more job is there. After the job is completed, you have to run means you have to specify the job. Generally, we use only these two, either
So
date and
at
time
the time
or
we can
immediate.
run
Pardon
so
me?
if we choose the after job, so we can run multiple background jobs.
Exactly, because after job means what? It's like this. Now it's in SAP, which I'm going to cover in schedule manager. There is a schedule manager. Now afterwards, I'll tell you our closing cockpit. In companies, what we do like this: interest calculation first, month end processings, every month end, monthly provisions, decision run, and balance sheet release every month. Then open the periods for next month. Because this month profitability balance sheet you release, you open only next month. This month nobody should post. Now these are the jobs. These are the jobs. Now this job should be run after completing these jobs. Like this after job. Because which I'm going to cover all the things we can schedule at one go. You can schedule and run at a time. Everything will be run automatically. First interest will be posted. Next month end projects will be posted. The depreciation will be posted. Balance sheet will be ready. Then you open the periods for next month. See, these are the jobs which we are going to do. So you can schedule, because in live so many people will there to do, each person will be different jobs. Now what we can do, we can schedule as a schedule manager or closing cockpit all the jobs. We can give the date and time, and you can specify when it has to perform. The system will do automatically on the date at that time, which I'm going to cover afterwards. So schedule manager is free of cost, closing cockpit is extra cost, but activities are same. Now we have posted the depreciation for the month of April, and you have seen the result, and you have seen asset wise the depreciation amount posted. Now I'm going back and seeing this one. Use the transaction code AFAB depreciation run. I'm going to the same screen, AFAB depreciation run. Then once we run the depreciation for April, what we do? We give the company code RIL, fiscal year 2020, posting period 2 up to May. Because one you already completed, we give 2. Then select plan posting run radio button, plan posting run radio button. Then it posts for May. Once again, then I have to give 3 June, 4 July, like that you have to do. Now, I'm giving a scenario because SAP has to give all the options, whatever is available. I'm giving a scenario. After executing depreciation run for April, depreciation run is April is over. Now you run already you completed the run and posted the entry. And before executing depreciation run for May, I have not yet run. I have not yet run May. You capitalized an asset with 27/4/2020 date. In companies, what we do the backdated capitalizations. Why we do backdated capitalization? If I do capitalization with the backdate 27/4, I can calculate depreciation from 27/4. Especially this will be used in income tax. In income tax, which I'm going to cover afterwards. If the asset is capitalized before 30th September, suppose your income tax, the rate is like this, 15% is the machinery rate. Machinery depreciation rate in income tax, 15%. I'm going to cover afterwards. This is 15% if this asset is capitalized before 30th September. That means asset capitalized for more than 180 days. Suppose this year. Suppose if the asset is capitalized after 30th September, suppose now this is capitalized. I'll give you some example. After suppose 20th October 20. This is capitalized on this date. Or today's date I'll give. 11. Today I have calculated the asset. In income tax, I get 50% of 15%. 15% of 15%. That means 7.5. So if the asset is capitalized before 30th, more than 180 days in the whole year, we calculate the full rate of 100%, 15%. If the asset is capitalized after 30th September, says today, in income tax, I can claim only 7.5% this year, not 15%. So in income tax, what we do to claim more benefit, more depreciation benefit. Even though asset is capitalized, suppose I'm giving the example, asset is capitalized on like this 6/10/2020. What I do, instead of showing this way, I show this one here. It is capitalized backdate. I'll do backdated capitalization. So that to claim more depreciation amount. In companies, we do the backdated capitalizations. So I'm giving a scenario. The scenario like this. After executing depreciation run for April only you run posted. And before executing depreciation run for May, you capitalized an asset with 27/4/2020 date. So when you run the depreciation first for the month of April, this asset was not there. Now today, after completing the run, you capitalized. So what we do, suppose the asset number is 2,03,000, sub number 0, machine number 3. Now system calculates like this. In the month of May, it calculates like this. For the machine number 1, 152,31,5 whole month. Machine number 2, 152,31,5 whole month. Machine number 3, which you capitalized after run, it calculates from 27/4 to 31/5. Because when you run first time, this asset was not there. Your auditor will ask you why you have done the backdated capitalization. Because you're calculating from 27/4 backdated calculation. So what SAP has done is, instead of running this way, go for repeat. Repeat. If you can see here, they have given repeat. What is the use of repeat? I'm taking the same example, company code RIL. Fiscal year 2020. You give once again posting period 1. Now don't give 2, 1. I'm giving once again. Select repeat button, repeat radio button, repeat radio button. Then what system will use? System checks. For which assets depreciation was not calculated in the planned posting run. In the first run, for which asset is not calculated, it checks calculate depreciation only for those assets and post the depreciation. So in our example, which asset is not calculated in the earlier? We have not calculated earlier. For this asset only it calculates when I give 1, 27/4 to 30th/4. That means you're repeating the run for the same month, for the April month. This is called repeat. So it calculates only for this asset. Other assets it will not calculate. It will not reverse the old asset and pass the entry once again. It will not do that way. It calculates only for the assets which was not there in the earlier run. For that assets, it does. Once that is over, now you can run the repeat. Once this is over, what do you do? Give the company code RIL fiscal year 2020 posting period 2 means May. Then for all the three assets, it calculates from 15 to 31.5. For all the three assets, it calculates 15 to 31.5 when you select plan posting run, plan posting run. So in the repeat run for the asset which you have capitalized, that also you have calculated earlier for the month of April. Now you give plan posting run for all the assets. If you see this example, repeat is possible only after plan posting run. Once the plan posting run is over, then only you can do the repeat. And one more thing, repeat is possible only for the latest plan posting run. What is the latest plan posting run? Let me give an example. You run the depreciation up to July, not to 1 month. Suppose you run up to July. You capitalize an asset with 27 date for 2020 date. That is mission number 3. Repeat is possible only for July. Only for July, because plan posting run you done only for July. Only for July, repeat is possible. When you do July, repeat is possible. When you do July, it calculates from 27.4 to 31.4, 31.7. It's possible only for the latest plan posting run. What is the latest plan posting run? Latest plan posting run is July, because already you run the for up to July. Next, one more field they have given, restart. What is this restart? We have scheduled depreciation run today at night 11 o'clock, 11 p.m. I told you we can schedule at any time. At that time, the server is down. Sometimes what happens, server will be down. At the time, nobody will be there. So at the time, it cannot do the processing. Very rare case it happens. It never happens. Very rare case it happens. Next day morning, when you see the job status, you're seeing job status, it gives message restart. Today you're seeing it has given the job status finished. Instead of showing finished, it will ask us to restart. So give the parameters once again and select restart. Give all the parameters whatever you're given and select restart. It never happens, but SAP has given the option. One more they have given, unplanned posting run. Unplanned posting run. Posting run not as per plan. In the customization you have given, posting run will be monthly, but not as per monthly. Earlier you have given plan posting run monthly, but it's not monthly. In live environment, companies follow unplanned posting run. Most of the companies, they follow unplanned posting run. Why they follow, why it's required, I'll tell you with an example. Once depreciation is run and posted, that entry cannot be reversed. In SAP, any entry can be reversed except depreciation entry. We cannot reverse the entry. What we can do? We can recalculate, but we cannot reverse. The entry can be recalculated, but cannot be reversed. In SAP, any entry can be reversed, but depreciation entry cannot be reversed. Suppose there is a wrong rate. What do? You change the rate, you recalculate, the differential entry will be posted. But we cannot reverse the old entry. Now, generally, auditors come for audit only after the year end. Generally, they come for audit only after the year end. If they come in the middle of the each quarter or each half year, it is only for limited review, not the full audit. After the year end, they come. If you capitalize an asset item and calculate depreciation, auditor will say it's of revenue nature charged to P&L account. Suppose for an item lump sum amount, I have charged to P&L account, or I have capitalized and calculate depreciation. They will say it's of revenue nature. Don't add to asset and claim depreciation charged to P&L account. They say charge to P&L account. Some expenditure we charge to P&L account. They say it's of capital nature, add to asset and calculate depreciation. always the dispute will be there with the auditors. Suppose you're done capitalization because they're coming only after the year end, you run because every month you have to post the depreciation. The profitability purpose you require every month depreciation. Suppose if you add a capitalize any asset and you charge the depreciation, when you run the depreciation, charge the depreciation, we cannot reverse. And they come only after the year end and they make all the changes. Always the dispute will be there with the auditors. So what we do in live environment, we do like this. We create two provisional accounts. They're normal accounts, not reconciliation accounts. Two accounts we create, like depreciation provisional, which is a P&L account. Accumulated depreciation provisional, which is a balance sheet account. So we create a provisional accounts, where normal accounts, not reconciliation accounts. What we do, we capitalize the items during the year. We capitalize as per our this information. Then we see the report and pass the entries, the report which I have shown you already, and pass the manual entry. Pass a manual entry. Suppose we have seen the report which I have shown you. The depreciation amount is 1 lakh. Suppose I am giving the example. The entry we pass like this: manual entry, depreciation account debit, depreciation provisional account debit, credit to accumulated depreciation provisional. So every month we pass a manual entry, one entry, so the profitability presentation is correct, because we require every month for profitability presentation purpose. So in the year ending, in the provisional accounts, the amount will be like this. Depreciation provision will be like this: April 1 lakh, May 1 lakh, June 1 lakh, up to March 1 lakh, total 12 lakh. Some amount I'm giving. This is the provisional amount manual entry. The same way, accumulated depreciation provisional account. So the credit will be like this: 30th 4 1 lakh, 31 5 1 lakh, like this up to March 12 lakh credit. Year total is a manual entry, because we are not run the depreciation. We are posting, we are seeing the report and passing a manual entry. Because we see the report and run the depreciation, that entry cannot be changed. In the year end, once audit is over, because audits will come only after the year end, pass entries for capitalizations and decapitalizations based on auditor suggestions. Suppose in the year ending, they come for audit, they ask you to capitalize some amounts, claim depreciation. They ask you to charge to P&L account, do that one. Once you confirm, once you accept, then what you do? Reverse provisional entries with 31st March 21 date. Whatever entry you have posted, depreciation provisional and accumulated depreciation provisional, you reverse this entry with 31st March date. See, 31st March, I am reversing 12 lakh rate, 12 lakh debit, accumulated depreciation. The value will be 0. This we do only after the audit is over. So when you reverse this entry, this value will be 0. This account value will be 0. This account value will be 0. Then what you do? Instead of running every month, go to depreciation run AFAB. AFAB. Come to this area. Company code RIL. Clear 2020. Don't run every month. Only run for the 12th month up to March. Once audit is over, then only you run up 12 up to March. Select unplanned posting run. Unplanned posting run. Run only in the year end. Don't run every month. Run every month. You pass a manual entry by seeing the report. Unplanned posting run. So 12 months depreciation will be posted at a time on 31st March 21. Suppose 12 months depreciation is like this. Depreciation account debit, credit to accumulated depreciation for 12 months, 12 lakh 10,000. Why 12 lakh 10,000? Because the auditor asks you to make some changes to the assets. You capitalize some assets. So though you provided 12 lakh, the depreciation is coming because the auditor changes 12 lakh 10,000 for the whole year. It can be more, it can be less. Suppose the amount is coming more as per the auditor suggestions. You capitalize some item, run the depreciation, the amount is coming, depreciation for the whole year, 12 lakh 10,000. Then what is the effect, profitability effect? Every month you posted like this, you posted like this, every month you posted 1 lakh every month 1 lakh you posted, any amount. So profitability effect is like this: from April 20 to February 21, for 11 months, 1 lakh per month, 11 lakh. for up to March, up to February. Up to February, 1 lakh per month, manual entry, whatever you posted. What you post every month? 1 lakh, 1 lakh, 1 lakh. So 1 lakh per month for 11 months, 11 lakh. For March depreciation, March how it will affect? March, how much you posted depreciation provisional? If you see here, March you posted depreciation provisional 1 lakh. You posted manual entry. You posted manual entry 1 lakh. 1 lakh. In March 31st, what is the amount you have reversed? See here, you have reversed. On 31st March, you have reversed 12 lakh. 12 lakh rate. 12 lakh. 12 lakh rate. Now, when you run the depreciation, as per run, how much is posted? 12 lakh 10,000. 12 lakh 10,000 posted in the month of March. So, what is the net amount for March? 1 lakh debit, 12 lakh credit, 12 lakh 10,000 debit. Net amount is 1 lakh 10,000 for March. So, that means what? If you see here, 11 lakh up to February, March 1 lakh 10,000, total for the whole year 12 lakh 10,000. Why it's required? Because every month you release the profitability. The profitability figure should not be changed. So I'm not changing the profitability up to February. Whatever provision I have made, 1 lakh per month, the same amount has come. 1 lakh per month, same amount is there. Same amount is there. So whatever effect has come because of the harder changes. Whatever effect has come because of the harder changes, it has come in the month of March. In the month of March. In the month of March. The effect has come in the month of March. So there is no change in your profitability declared up to February. So total for the whole year will be 10 lakh 10,000. So in live environment, we do like this. If the order doesn't make change, you can run every month. But if it comes and changes after the year end, then it will be a problem. What we do, we pass manual entries up to March. And in the year ending, once the audit is over, once they confirm the capitalization, decapitalization, what we do, we reverse with 31st March date. Then we run the depreciation differential will post only in the month of March. So that is the advantage of going for unplanned posting run. That is the company choice. But most of the companies, they go like this. Because every month they require the profitability purpose depreciation. They see the report and post a manual entry. Post a manual entry. So this is the unplanned posting run. These are the 4 methods given by SAP in ECC 6. This continuation will take up in tomorrow's session. Okay. Thank you very much.
Sir, one small query with
Actually,
here
we
also.
have given in OBYC. In OBYC, let me check OBYC. Unplanned cost. Unplanned cost OBYC. Right clearing, upright provisions. Right clearing provisions. Okay. FR2. Chart of accounts. Suppose I have morning batch. FAL. No, you can have different valuation classified. You can have.
Okay.
If you won't have, you can post differently.
Okay. So,
Okay, you
like the
select.
question with this unplanned delivery cost, will it hit in the PL or sir?
Yeah, it will hit in the P&L account.
Okay. So, like for in case of asset also, like as you have said, the unplanned cost is there. So, for example, freight.
No. Unplanned cost, they do like this. 1 minute. Suppose it's like this. Suppose freight and unplanned cost will be like this. 1 minute. Inventory cost is, suppose basic price is 1,000. Okay. Now, planned cost is 20 rupees. Unplanned cost is 10 rupees. Now, it will be added to inventory. Na? The entry will be inventory account debit. This total amount, planned cost and unplanned cost. Okay. That is 1,030 to GRIR clearing. Okay, you can use the same account or different account. Suppose same different accounts. 1,000 to GRIR planned cost 20, planned, unplanned. You can have separate accounts also to GRIR clearing unplanned, unplanned, unplanned. Okay. when you do a MIRO, invoice verification, verification, entry will be GRI clearing debit, and cost, these two also debit, unplanned also debit, paid to vendor. This way it works. Vendor, different vendors, different vendors. Yeah, tell me now. Now it will be added to the inventory only.
Okay.
Because like freight, we do not know. We know the exact amount, which is a planned cost. We do not know the exact amount, unplanned cost.
Okay. Okay, so like, is it recommended actually for an unplanned cost, or like because a few times what happens, if there is a machinery aspect also, like we get the machinery, but the freight value is there, that is not considered most of the time.
No
So
problem.
can
MIRO time you can add. MIRO time you can add. Suppose I'm not added this. MIRO time you can add. Suppose this is the cost. This is one way.
Okay.
Second way, what I can do, I do only inventory basic mission cost only. Okay, this will be 1,000. Suppose say, okay, GRI 1,000. At the time of MIRO,
okay.
I can do like this. Instead of doing like this, I can do like this. System takes GRI clearing 1,000. 1,000, because here the some company, most of the company, they do like this. I'll tell you the reason. 1,000.
Yes.
Paid to vendor A, 1,000. Okay. Now, why unplanned cost different vendor? The reason is this freight will be different party, not the same party. So vendor A, suppose. Now I can do one more thing. Here I can do like this. Now I can add to material when I do the MIRO, which I'm going to cover. Okay, I can do like this. I can have one more entry. Entry will be like this. Inventory. I can debit to inventory or debit to expenditure. My choice.
Right.
It to vendor B. But the party will be different always. So I add this one 20 or 10 or whatever is it, 20, 20 or 20 plus 10, 30, 30. So here we get the exact amount. Here unplanned cost, when I say this is not exact amount. Always some amount will be unplanned. Is unplanned. It's not planned. Actual cost. It may come,
so
may not come. It can be more. It can be less.
Sorry. Please, sir.
Actually, here we do not know exact amount. So here I know the exact amount. Suppose, see, the cost is coming instead of 20, 30, 25 is coming 25. Here there is no unplanned cost. It is actual cost only. That is it. You can add to material. You can debit to expenditure. Your choice.
Yes.
So most of the companies, they follow this method, because these otherwise, always you plan some amount, but actually will come less or more. Vendor will be different. The same, not same vendor, different vendor will be there.
Okay.
That is a problem.
Okay, sir, this is the similar case, like with reference to asset capitalization also, that unplanned, is it the similar case?
No, that is different. Unplanned is what? Run the depreciation only in the year ending, not as per the plan, because depreciation will be as per plan is monthly. Now you run in the year ending, that is unplanned. Instead of monthly, planning for 12 months at a time, posting at a time. That is unplanned.
Okay. Sir, and this reversal of depreciation every month is done
Manual
like,
entry, you can do this is a manual entry you can do. When you run AFAB, it cannot reverse. This is a manual entry. Every month don't reverse. You reverse only on 31st March. Only 31st March with full amount. Only 31st March you reverse. Because if you reverse every month, the profitability will change.
correct. So, but we'll be updating the new depreciation, sir, like at that year end.
Where year ending anyhow, it's coming only in the month of March. The differential, whatever is there, the differential is posted only in the month of March.
Okay.
Even the whole year differential posted only in the month of March. Because I cannot change the figures, not profitability figures. It's a listed company.
Yes.
Every quarter you declare the results. Every half year you declare the results. Every month in 9 months you declare the results. The figure should not be changed. So whatever differential is there whole year, that will post in the month of March.
Okay. Correct, sir. Right. Thank you, sir.
No, most of the companies, they follow this method.
Correct. Okay. Accumulated depreciation which is relevant for that year only, we actually run it.
Exactly. Depreciation as a whole, for the year as a whole, they run.
Correct.
Because after audit is over.
Okay.
Hello, sir.
Tell me. Please tell me.
Sir, while creating the main asset master,
Ah.
at the time of giving the depreciation RL3, it is taking at two levels, sir. It is taking at book depreciation and group GBP, but it is not accepting at tax balance.
The book depreciation key takes automatically.
Okay.
The reason is like this. Yeah, specific transfer depreciation terms. The reason is, see here 15 transfer 01 is coming. 01 is what? 01 is book depreciation. What is the book depreciation you have given? RL1. If you give RL1 will come. RL3, RL identical you have selected. Same thing should be taken. Whatever you have given for book depreciation, same rate will be taken. We cannot give different rate. And we will not use at all this one. We have different settings are there, which I'm going to cover afterwards.
But in the notes it is mentioned select RL3 useful life method depreciation key for all three areas. So
where 1 minute.
It is an AS01, sir, I'm talking about.
Oh, AS01. Yeah, if I use the same thing will come. Na? Now, what we are saying, now if you see here, RL3, if I give RL3 only is coming all the areas. Na? If I give RL1 only will come all the areas.
But it is taking at two levels, it is taking RL3, but in tax level, it is not taking RL3, sir. It is taking RL1. I'm not able to modify it.
No, it will not take all the. Now, this can be modifiable. First and second, you cannot modify. See here, let me create a one master. See here, I'll see your settings also. RL 2000. Mission, I will not save. Applies today. Capitalize today. Different department here. Now depreciation areas. See here, RL1 is taking. Suppose here like this. I'll take here RL3. Suppose say. Okay, so let me give the useful life 20 years, 6 months. Now here I want to give RL1 20 years. Separate rate 6 months. See here, it takes the rate only from book depreciation. See, even though I have changed, it's not accepting. I cannot change also. Always tax depreciation key, it takes from the book depreciation. Because of the setting here. You have seen the identical same of 01 book depreciation. 01 is what? Book depreciation. 0 is what? Book depreciation. Same rate it takes. Always it takes the same rate. Here I can use the same one, I can use different one, I can use one RL1, anything. I can use the same, I can do whatever I want. But 01 and 15 will be the same rate it takes.
But in my case, it is not taking, sir. It is taking RL3 and RL1.
Must be you have to check this setting. OABD, whether 01 is there, identical is there or not. OABD. OABD. Is server is on? Your server is?
Yes, sir. My server is on, sir.
Show me. Give that any desk number.
Okay. Just note down, sir.
1 minute. 1 minute. Yeah, give me the number.
The number is
OABD. Yeah, okay. Okay. Now create the master.
A0, sir.
A01. Capitalize done. Yeah.
We'll go for next.
MD tab.
Cost center department A.
Awesome. Depreciation area tab.
Depreciation area.
Now give RIL2 first one.
RIL 2 or 3, sir? 3 as per
Anything, no problem. 3.
3.
Down also 3.
Yeah. Yes, sir.
Give the useful life some years.
Yeah.
Both places.
Can I give enter, sir?
Enter you. See,
Yeah.
3 is coming.
Yeah, yeah.
Now you give third one RIL2. Enter. It's not changing. The first one you give RIL1. Enter. Enter. Enter once again. See, RL1 is changed. It's taking the rate from 01.
Okay.
Don't save. Don't save.
Okay.
Even if you save this one in this request and this data in this request, no issue at all. Afterwards, I'm going to cover when we save, automatically save in the request. When I save, automatically save in the request, which I'm going to cover in the project.
Okay.
No issue.
Can
No
we
issue.
can we delete, like, suppose
No, don't delete.
if I
Don't
have,
delete. Not necessary. Not necessary. No issue. Not
okay, so
necessary.
actually by mistake, while practicing it is account receivable, I have saved in account payable request only.
No
That's
problem.
why
No
I
problem at all. No problem at all.
Okay.
Hello, sir.
Everyone, they post the manual entry. Year ending, they run unplanned. Most of the companies, if they want to run monthly, they can do. There is no problem. But generally, they do like that.
Oh, okay, sir. Thank you, sir.
Thank you. Run as per the plan.
Okay, sir. Thank you.